Today, we're diving into one of the most debated topics among investors. Crypto versus stocks, which is the better investment? If you're trying to decide where to put your money, whether you're new to investing or looking to diversify your portfolio, this video is for you. Let's break down the pros and cons of each, compare their potential returns, risks, and everything in between. Don't forget to like, subscribe, and hit the bell icon for more financial insights. Let's get started! But before this, guys, I want to introduce you to a fantastic resource called Copy My Crypto. This site lets you mirror the exact buys and sells of an incredible investor in the crypto market. His track record is impressive, to say the least. But don't just take my word for it. Check it out and see for yourself. The best part? You don't need to know anything about cryptocurrency. By copying the moves of someone who has a deep understanding and proven success in the crypto world, you can potentially see similar gains without the hassle of figuring it all out on your own. It's a game changer for anyone looking to dive into crypto investments. Without the steep learning curve, go to the site and decide for yourself if this is the right move for your investment strategy. First, let's talk about stocks. When you buy a stock, you're essentially buying a piece of a company. This ownership entitles you to a portion of the company's profits, usually paid out as dividends and potential appreciation in the stock's value. Stocks have been a popular investment vehicle for decades, offering a relatively straightforward way to invest in businesses you believe will grow. Historically, the stock market has provided an average annual return of about 7–10% after adjusting for inflation. This makes it a staple in many investment portfolios. Stocks can be broadly categorized into two types: common stocks and preferred stocks. Common stocks give shareholders voting rights but come with higher volatility, while preferred stocks offer more stable dividends but generally don't come with voting rights. When investing in stocks, you're putting your money into companies with proven business models, financial statements, and histories. This offers a level of predictability and reliability that's often absent in more speculative investments. Companies like Apple, Microsoft, and Amazon have shown consistent growth over the years, providing investors with steady returns. Dividends from stocks can also provide a regular income stream, which is particularly appealing for retirees or those seeking a passive income. Moreover, the stock market is well regulated, with agencies like the SEC ensuring transparency and protecting investors from fraudulent activities. Now let's turn our attention to cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Bitcoin, the first and most well-known cryptocurrency, was created in 2009. Since then, thousands of alternative cryptocurrencies have emerged, including Ethereum, Ripple, and Litecoin. Cryptocurrencies operate on a technology called blockchain, which is a decentralized ledger that records all transactions across a network of computers. This decentralization is one of the key features that set cryptocurrencies apart from traditional currencies and assets. Cryptos have gained popularity due to their potential for high returns. Bitcoin, for instance, saw an astronomical rise from a few cents to over $60,000 at its peak. However, this potential for high returns comes with high volatility and risk. When comparing stocks and cryptocurrencies, potential returns are a crucial factor. Stocks, as mentioned earlier, have historically provided steady returns in the range of 7–10% per year. However, the performance of individual stocks can vary widely based on the company's success. Cryptocurrencies, on the other hand, are known for their explosive growth potential. Bitcoin, for example, has provided early investors with returns that are unheard of in the traditional stock market. But with great potential returns come great risks. While a stock might gain or lose 1–2% in a day, cryptocurrencies can swing 10–20% or more in a single day. This volatility can lead to massive gains, but it can also result in significant losses. Risk is another critical aspect to consider. Stocks are generally considered less risky than cryptocurrencies, but they are not without their own risks. Economic downturns, changes in market conditions, and company-specific issues can all impact stock prices. Cryptocurrencies, while offering high potential returns, are also highly speculative. They face risks such as regulatory changes, security breaches, and technological changes. The lack of regulation in many areas also means less protection for investors. Moreover, the relatively short history of cryptocurrencies compared to stocks means that long-term performance data is limited, adding to the uncertainty. Another critical difference between stocks and cryptocurrencies is their underlying value and utility. Stocks represent ownership in a company, and their value is tied to the company's performance, assets, and earnings. This intrinsic value provides a level of security for investors. Cryptocurrencies, on the other hand, often derive their value from their potential use cases and the technology behind them. Bitcoin is often seen as digital gold, a store of value, while Ethereum is valued for its ability to support smart contracts and decentralized applications. However, many cryptocurrencies lack a clear use case, which can make them more speculative and volatile. Liquidity and accessibility are also important factors to consider. Stocks are highly liquid assets, meaning they can be easily bought and sold on stock exchanges with minimal price impact. This liquidity provides investors with flexibility and ease of access. Cryptocurrencies, while increasingly becoming more liquid, still face challenges. Market depth can vary significantly between different cryptocurrencies, and during periods of high volatility, liquidity can dry up, making it difficult to execute large trades without affecting the price. However, the advent of platforms like Coinbase and Binance has made it easier than ever to buy, sell, and trade cryptocurrencies, increasing their accessibility for everyday investors. Diversification is a key strategy in investing. Stocks and cryptocurrencies can play different roles in a diversified portfolio. Stocks offer steady returns and dividends, while cryptocurrencies can provide high growth potential. By combining both asset classes, investors can potentially reduce overall risk and enhance returns. It's important to balance your portfolio according to your risk tolerance and investment goals. For instance, a conservative investor might allocate a larger portion to stable, dividend-paying stocks, while a more aggressive investor might allocate more to high-growth cryptocurrencies. Regulation plays a significant role in the investment landscape. The stock market is heavily regulated, providing a level of security and stability for investors. Regulatory bodies like the SEC enforce rules that companies must follow, ensuring transparency and fairness. Cryptocurrencies, however, operate in a more uncertain regulatory environment. Different countries have varying stances on cryptocurrency regulation, which can affect the market. For example, China's crackdown on crypto mining had a significant impact on the market. While some regulations can bring stability and legitimacy to the market, overly strict regulations can stifle innovation and growth. Investors need to stay informed about regulatory developments in the crypto space. Technological innovation is another factor to consider. The stock market has been around for centuries, but it has continually evolved with technology. From electronic trading to algorithmic trading, technology has made the stock market more efficient. Cryptocurrencies, born out of technological innovation, continue to evolve rapidly. Blockchain technology, smart contracts, and decentralized finance, DeFi, are just a few examples of how crypto is pushing the boundaries of what's possible in the financial world. Investing in cryptocurrencies is also a bet on the continued growth and adoption of these technologies. As these technologies mature, they could potentially disrupt traditional financial systems and create new opportunities for investors. Community and sentiment play significant roles in both markets. Stocks are influenced by investor sentiment, market trends, and economic indicators. Companies with strong brand loyalty and positive sentiment often perform well. Cryptocurrencies are heavily influenced by community sentiment. Platforms like Reddit, Twitter, and other social media play a crucial role in shaping the market. A single tweet from a prominent figure can send prices soaring or crashing. Understanding the sentiment and staying connected with the community can provide valuable insights for crypto investors. However, it also adds another layer of volatility and unpredictability. So how should you decide where to invest? Here are a few practical considerations. First, assess your risk tolerance. Stocks are generally less volatile but still carry risk. Cryptocurrencies offer higher potential returns but come with higher volatility. Next, consider your investment goals. Are you looking for steady income, long-term growth, or high-risk, high-reward opportunities? Your goals will help determine the right mix of stocks and cryptocurrencies. Lastly, do your research. Stay informed about the markets, technological developments, and regulatory changes. Join investment communities, follow reputable sources, and continually educate yourself. And remember, diversification is key. Don't put all your eggs in one basket. By spreading your investments across different asset classes, you can better manage risk and take advantage of growth opportunities. In conclusion, both stocks and cryptocurrencies offer unique advantages and risks. Stocks provide stability and steady returns, while cryptocurrencies offer high growth potential. The right choice depends on your individual risk tolerance, investment goals, and market outlook. We hope this video has helped you understand the key differences and considerations between investing in stocks and cryptocurrencies. Don't forget to like, subscribe, and hit the bell icon for more financial insights. Thanks for watching and happy investing!